Welcome to the OPEC Monthly Oil Market Report podcast. This podcast was recorded on Tuesday, the 14th of March, 2017. I'm Atna Trainer, and every month we'll give you an overview of the oil market, according to the Organization of the Petroleum Exporting Countries. Let's take a look now at the highlights of the March 2017 OPEC Monthly Oil Market Report. Improvements in the global economy that have started in the second half of 2016 are likely to continue in 2017. After estimated growth of 3% in 2016, global economic growth is expected to pick up in 2017 to reach 3.2%. Support is coming from the OECD group of countries, with growth of 1.9% in 2017 compared to 1.7% in the previous year. GDP growth in China and India are forecast to slightly decelerate, yet still remain strong. The stabilization of oil markets seen since the OPEC non-OPEC declaration of cooperation has helped to support upstream capex spending and improve oil producers' income, adding to global economic growth. Higher than anticipated economic growth may come from the US and the Eurozone, as well as Japan to some extent. Upside potential also exists in the emerging economies of China, India, Brazil, and Russia. At the same time, political and economic uncertainties could hamper the global economy from further and faster improvements, including upcoming elections in major European economies, developments regarding Brexit, and fiscal, monetary, and trade policies. In the US, labour market improvements have continued to support the economy and significantly lifted consumer sentiment. At the same time, industrial production has started to pick up, while being supported by the recovery in oil prices. In recent months, U.S. domestic consumption has turned out to be particularly supportive for the economy, and the return of the investments in the oil industry is expected. However, uncertainties regarding both the consequences of new economic programs as well as the impact of the normalization of monetary policies remain. In this respect, upcoming budgetary discussions in combination with the expiry of the debt ceiling suspension in mid-March will need close monitoring. In the Eurozone, the economic recovery continues, supported by domestic improvements, but also by the ECB's extraordinary monetary stimulus. The ongoing weakness in the banking sector, including continuing sovereign debt-related issues in Greece, may weigh on the region's near-term growth. Meanwhile, Japan's government-led stimulus has lifted momentum, with most economic indicators pointing to the upside. As a result, GDP is expected to rise marginally in 2017. Within emerging and developing countries, growth trends are likely to vary once again in 2017. Brazil and Russia are expected to recover at different levels from 2 years' recession, partly due to lower commodity prices. Despite a somewhat slower momentum, GDP growth in both China and India is holding up well. The rise in commodity prices has provided vital support to the economies of several developing countries. Meanwhile, the increase in commodity prices has positively lifted inflation in advanced economies to healthier levels, providing major central banks some room to normalize their monetary policies. Global trade is also likely to benefit from more stable commodity prices in 2017. The rebalancing of the oil market, driven by the recent successful OPEC non-OPEC declaration of cooperation, is likely to further enhance the global oil industry, leading to even more global economic growth and hence higher oil demand growth in 2017. This has been the March 2017 Monthly Oil Market Report podcast, brought to you by Podcast Production Limited. If you found this podcast useful, please register your vote on iTunes. Thank you so much for listening, and goodbye until next month.